this day just keeps getting better and better. Coming from New York, because that's where the Wall Street buildings are. Trade trade war fears have been returning to Wall Street, wiping out a chunk of the stock market's recent surge. The Dow plunged more than 450 points on Monday morning after 45 surprised investors by threatening to impose a higher tariff on China in a late Sunday tweet. The sudden escalation of the U.S.-China trade tensions deals a major blow to investors' expectations that Washington and Beijing would reach a trade deal in the near term, which it hasn't. 45's threats raised the risk of a prolonged fight between the world's two largest economies. Heavy selling knocked the S&P 500 down by 1.6%, while the Nasdaq tumbled 2%, 2.2%. The VIX, a market volatility index, jumped to its highest level since January. A big underpinning of the rally was this consensus that a trade deal with China would eventually get done, said Michael Block, a market strategist at Third Seven Advisors. This tweet may be a tactic, but it has bulls unglued, implying what if. World markets suffer even sharper losses as investors express concern about how tariffs and trade uncertainty will impact China's already slowing economy. China's Shanghai Composite Index, also known as SHCOMP, tumbled 5.6%, its worst one-day drop since February of 2016, according to Refinitiv. The Shenzhen-based CSI 300 index closed 6%, 5.8% lower. China's yuan dropped almost 1%. It dropped 0.8% against the U.S. dollar and offshore trading. Hong Kong's Hang Seng dropped about 3%. Shocking escalation even on 45 Standard. Chris Kruger, analyst at Cowen Washington Research Group, wrote in a note to clients on Sunday. On Sunday, 45 threatened on Twitter to increase tariff rates on $200 billion in imports from China to 25%, up from 10% currently. The squatters said the increase would take effect immediately on Friday. Investors are unsure if 45 is trying to apply more pressure to Beijing to get a deal done quickly, or if he intends to carry through on his threat. Market analysts said either way, the threat increases the risk that the trade deal could come undone. The threat also has negative implications for the outlook of other trade spats, including for the auto and the passage industry. A deal that is set to replace which is the USMCA deal that is set to replace NAFTA, according to analysts at Goldman Sachs. His move injects major uncertainty into negotiations, which now face a risk of an extended impasse, perhaps even through the U.S. presidential election or squatter election, because 45 is not a president. Michael Hartson, head of China and Northeast Asia at the... What now?
Are you doing laundry yet?
No, I haven't.